Good morning, Futures family and Team Top Step. It's time for the market prep. June the 28th, Wednesday. As always, our focus is seeking accurate context, always thinking about risk management and remaining patient. Good morning, everyone. My name is John Hoagland. Thanks for trusting me with your time. A couple of things early in the session today. We have a new link for group coaching. I'm putting that in the chat right there. There is also a new link for Make Hoag Money, which will be after the group coaching session today at 2 o'clock. And I'm also putting the link in the chat as we speak. Hey, get this in here so we get the things straightened out. We kind of I don't know what happened, if the other links ended or if there was some sort of a flaw, but I've got new links for everybody. And of course, we look forward to seeing everybody there. So the economic data du jour, if you will, the mortgage rate came out at 7.75%, 0.03 higher than last week's. Applications, however, were up by about 3%. Retail and wholesale inventories came out. Retail inventories higher, wholesale inventories lower. Trade balance also came out lower than expected. At 8:30 today Central Time, we're waiting for Chairman Powell to speak at the ECB session, and 9:30, of course, the EIA petroleum status report is due. Stock index futures currently looking like they're going to be opening lower this morning. Prior to those economic numbers, they were kind of mixed, looking a little bit lower here after the numbers came out. A lot of this is led by a 4% loss in shares of NVIDIA on news that Washington is considering restricting exports of AI chips to China. So seeing a little bit of tech difficulties here early in the session. We've got the NASDAQ down 0.47%, getting hit the worst of all of the indices. So the positive economic numbers yesterday have traders kind of mixed, as the economy seems to be holding up well. We had a nice rally in the equities yesterday. I'm kind of questioning how solid that rally is going to be. We'll check that out on the charts here shortly, because I'm sure that's raised a lot of fears of continuation of higher interest rates. Again, the meeting at the end of July here, I think it's the 27th and 28th. So we've got some time to digest that and some time to absorb what any of the talking Feds have to say over the next couple of weeks. Focus today, of course, will be on the meeting of central bankers, including Chairman Powell in Portugal today. The VIX is up slightly this morning, 13.78, was 14.31 yesterday, so actually lower than it was yesterday at this time. The dollar index, 102.9, was 102.45 at this time yesterday, and the yield on the 10-year holding steady at 3.74%. It was 3.72% yesterday. No major changes there, and no major changes in the market state in the 10-year. It is still very range bound. As always, make sure that you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. Both links are group coaching. I probably did that. Let me redo this. Okay, this says Make Hoag Money. I probably just failed to pick up the link. And here it is. Let's see if it looks different here. Now, hopefully that is that is the right link now. You seem to be having a lot of trouble here with Zoom, and I'm sure it's probably me. Good morning, everybody. We've got Stephen, first one in the room. Stephen Van winning the prize this morning. Futures trader today, trading today. Shaw, good morning. Lacey says good morning to everyone as well. She was just right here, and she has absconded. Casey, good morning. Alejandro, Theo, good morning. Hagel Matter, Scott saw and he conquered. Will, yes, of course. Yeah, beware the impact of chip restrictions. We got to keep our eyes on that, right? Rooster, good morning. Crowing early this morning. Gnostic, JD Royalty. Morning, family. Another trade plan today. And of course, we are just kind of in the markets environment, right? We are kind of watching as the market turns. We're trying to find our opportunities. We'll see if we can't find some today. Josiah, good morning. Bill, good morning. Bear goes long. Mark, Robert Harrison, Sarah Hall, prayers and love to you. James, good morning. Chaz, John, Dan Schrader, Ground Zero. Let's settle up. Yep. Caprice, Philip, Bear goes long. Charles March, Aiden, Alfred, Kaylee, good morning. Hopefully I got the right links on there now. Dr. VJ, Lisa, Travis, good morning. Fred, able to be here today. I hope I'm ready to heckle. All right, excellent. Matthew, boo, thank you. Fred, heckle. Thank you very much. Great day to be in NVIDIA puts, right, Mark? Rusty, Tom, my brother, good to see you. Love you. Anissa, good morning. Tim, Bear goes long. All right, that one works. Excellent. What's up, Chris? JD, Henry, Miguel, Hyperhidrosis, good morning. Just got funded. Nice job, Hyperhidrosis. Thank you for letting us know. Always great to hear about the successes of our traders. Just dance with the one you brung, Hyperhidrosis. We're going to be looking forward to seeing your continued success. Are there Mako monies? Are the afternoon sessions? Are we still having the morning sessions? We had a morning session yesterday, Dan. Afternoon session today. Morning session tomorrow. But that's all going to be changing more to the morning session and occasional maybe afternoon session as we continue to build and expand Top Step TV, which is, taking a little bit of time. We're looking forward to somewhere a launch near the end of July now. So we're looking forward to it. Miguel, a new funded account today. Congratulations. Jay, good morning. Henry G, everybody congratulating those that have been getting their funded accounts today and yesterday, and just, take it easy. Dance with the one you brung. You were successful in getting there. You can be successful in staying there. Just maintain calm, stay centered. You get emotional, things tend to get a little haywire, at least where I'm sitting. That's what tends to happen. So looking forward to your continued success. Excuse me. Ground Zero, I'm going to have a little cheers to you, a little bit of coffee here. And let's take a look at what's going on these charts. Again, starting as usual with the daily on the S&Ps. So we've been kind of anticipating a bull flag breakout in the S&Ps and even in the NASDAQ. But how did it do? Well, the New York Stock Exchange volume was a little bit higher, futures a little bit lower. We didn't gain open interest. We didn't bring in new business on this breakout to the upside. We lost open interest. That's a little unnerving for any new longs that may be thinking or are in this market, because we're not seeing the participation in volume and open interest on a technical breakout. That's typically not going to be good news. So it did not perform all that well on the breakout yesterday. It looked like it performed very well. It was very emotional. There's some weaker structure in the daytime frame from yesterday. So without any new business, this breakout is not likely to be very successful. We've, of course, got to keep our ears on Powell today to see what he may say over in Portugal. So here's our move yesterday on the 30-minute chart. We had a breakout that failed here. We continued to move lower. We ended up with basically 3 points of contact, and this was where the market really started to accelerate in the S&Ps yesterday. So we have a one-time framing market with all time frames acting in concert. We ended up, I think, with I don't know, at the highest, maybe 7,000, maybe 8,000 in positive delta, which we saw negative 24,000 delta the previous day. It acts as though this market got too short in the hole, and this rally was all about covering a lot of those shorts, and that's supported by the loss in open interest. So we've yet to bring in new business to the upside. We're taking care of old business. So that tends to happen first. We take care of old business. We'll be looking for any indication of new business to the upside if we're going to see this market continue. The way the market is opening, this emotional move didn't bring in participation. It cut off participation. I'm giving this breakout move to the upside a C. I don't think it performed all that well. Where we are opening now, we have a large potential for repair. What the heck is repair? Take a look at the TPO chart. Couple of things. It's a double distribution trend day. We have a poor low. In other words, the auction process didn't finish to the upside yesterday. That may become important in coming days. Okay. We had excess in the form of a rejected late spike. We have an excess low. The IB is the low. We have a balance area. We have an area of imbalance to an area of balance. The market is opening between these two areas of balance, which tends to create the market's eyeballs to focus on a point of control in the upper distribution and a point of control in the lower distribution. What happens to the breakout state if we come back down here and trade to a point of control down here at 43.84? 43.84 takes us almost, wouldn't take us all the way back to this trend line. But here we're seeing the high volume node here and the high volume node here. Opening between them increases the probability of at least one of the points of control to be revisited, if not both. Here's that TPO chart again. So we're kind of go away. Okay. Kind of looking at a potential inside day today where the market may just kind of hang around and finish up any business that didn't get done on the way up. We've got lots of layovers. We've got little holes. We've got little holes. We've got little layovers in this one-time framing market that, again, was very emotional and strong. But did it perform well? I'm going with no, not really. And we're opening in the area of potential repair. Okay. What else do I have for you here? Yeah, the nuances and the ruling reasons for me to take trades today is I'm expecting somewhat range-bound trade between here and just kind of keeping an eye on the fact that we have an unfinished upside auction, a weak high or a poor high at the high from the day yesterday. We've got some business to take care of before I think we can get to that. And, we have to be monitoring for longer time participation. If we put in a base here and we start seeing price moving higher on negative delta, that may be indicative that longer time frame traders are continuing to buy into this. With the amount of negative delta here and the loss of open interest, it's difficult to know what the longer time frame has been doing or what they've been thinking. The things that I've been reading and hearing, the longer time frame traders are looking for a much bigger pullback before they enter into the marketplace. But if they're underinvested, they may get forced to adjust those inventories at higher levels, and that's kind of what I'm monitoring for. Let's take a look at crude oil, which is just opened here. So we got another test of the lower extreme yesterday, another test of the lower extreme in the overnight session. Volume was pretty good yesterday, but according to the CME on the preliminary bulletin, there was almost no change in open interest in crude oil yesterday. Almost no change. I mean, it was less than 100 difference. Now, that's liable to change a little bit, but probably not by much. That open interest yesterday, to me, is shockingly flat because we're near an important inflection level where I would be looking for an accumulation or a loss in open interest. We got neither. So the API last night announced a 2.4 million barrel draw on crude stocks here in the U.S. The EIA is looking for a smaller drop, 1.75 million barrels with the forecast losses in U.S. crude inventories. Is that going to help our cause to break out and see continuation below this level? I'm going with no, not really. Take a look at the 30-minute chart. So we don't really have any overnight inventory. Last night we started here. We're about there. We've looked higher. We've looked lower. We've looked higher. We've bounced off the weekly kickoff low a couple of times. We took a look below it early in the overnight session, early in the morning session here. But we haven't been able to accept below it. It's been supportive. So now we've opened outside of range. Looks like maybe we've left the opening range the low of the session. And we're quickly closing the gap, possibly a value area special situation play today, because we're at an important inflection level. If we don't see inventories pushing price lower, we may see inventories pushing price higher. We may see participants pushing price higher. So opening out of range, out of value, accepting inside of yesterday's area of value could provide a relatively large opportunity. Again, this value area special situation play says the market opens out of range upon acceptance of value in the previous day. The market has a higher probability of reaching the other extreme of value at some point during that session. The subjective and the difficult part of this move is what marks acceptance inside of value. First learning about this opportunity, I was told that I needed two 30-minute bars to close inside of the previous day's value to mark acceptance before the value area special situation play can be played. It's rarely easy to do these. There's nothing really easy about trading. It just gives us reference, nuance, and potential. If we can find a way after we believe that the market has accepted inside of value from yesterday to look for a long where we can limit risk, that's what I'm talking about. That's what I'm looking for. We're already driving into value. Sometimes this play happens faster than we can respond to it. I've seen the market open out of range, get right inside of value, and then boom, right to the other extreme of value. I've seen the market go into value, come out of value, go into value, come out of value, come into value, out of value, and then finally grind its way to the upper extreme. So the difficult part of this is what is really acceptance, and that's very subjective and difficult to distinguish. So if you're going to play this play, be sure you're finding levels to limit risk. Try pullbacks. Here's the TPO chart from yesterday. So normal variation day, we did open with below a late spike, but we're seemingly rejecting price below the late spike. And again, acceptance inside value would be further acceptance of current value, which could test all the way up to value high. So we did open below a late spike, but for now, we are marking rejection of those lower levels. Doesn't mean we can't turn around and head lower, because the real open was below the late spike. A lot of cognitive dissonance in crude oil, at least for me today, because we've got the base of the late spike, which is right here, 76, 79. And then we've got where the late spike kind of began, which is the point of control up here at 68, let's call it 19. So this whole area here is going to be tough. And if we do spend a lot of time inside value, that should increase the probability of acceptance of value and a move to the upper side of value at some point during this session. NASDAQ. So the NASDAQ has a little bit of a different face on it than the S&Ps this morning. Of course, they are related, but they are different children. So, reversal pattern below weekly kickoff low. The move to the upside yesterday did increase open interest of 8,200 estimated new contracts. The auction in the NASDAQ yesterday performed better than the S&Ps. Of course, we know we've got to keep an eye on NVIDIA and other chip makers, which could take this thing back apart. We don't know how that's going to play out. But the open interest increase yesterday indicates a little bit of a healthier breakout, if you want to call it that. Of course, we got to keep our ears on Powell and watch the chip makers. But this emotional move actually brought I'm thinking a grade of B. It performed better than average for a move to the upside because of the amount of open interest. Volume was a little bit lower here, but I would bet it's a little bit higher, similar to what the NYSE did yesterday. Powell is speaking today at 8:30 Central Time. So here's the 30-minute chart. So let's get this trend lines in the right place. Okay, so this was the original bull flag that failed, right? So I left that trend line on here. This is the trend line where the S&Ps broke out and came all the way back up to this point of control. So did the auction process actually do a better job in the NASDAQ or the S&Ps? I like the NASDAQ because we increased open interest in a move that was directional throughout the day, right? So here's the original trend line, which is really where the NASDAQ found support yesterday and then finished above this trend line, which was the breakout point for the S&Ps. What does all this mean? Well, they are different kids. They are different animals. They're related. They're part of the same family, but each kid's a little different. So we've got open interest. We've got a week high again. Overnight inventory was semi-flat. Maybe it's a little bit short now, but we're opening in range and in value and in a possible repair type of situation. So the upside move yesterday started at a lower level, didn't get as far as the upside for the S&Ps. This was Thursdays, I believe. Let's see here, Monday, Tuesday, Wednesday. Wednesday's point of control was relatively prominent. This is where the S&Ps got to and above yesterday. NASDAQ didn't. There was a few more shorts here for this market to take out of the marketplace. But again, we did add open interest. So, if I had to choose, I would say, yes, we are in a double distribution trend day. Yes, we have a relatively weak low, but we have excess below the day before that. We have a weak low at the high as well. Those will come into play and become important when they become important. But look at where we're about to open. We're about to open in the area of potential repair. an assumed point of control for this distribution of time and volume up here, an assumed point of control for a distribution of time and volume down here, and the market is between them. It is likely to try and visit at least one of these consolidation areas or these distributions of time and volume, if not both, and be right in the middle. You've said it. I've said it. We all said it. And we got to be patient. We got to be patient. How the Bears are doing. It looks like they're moving to Arlington Heights. Who knows? But I'm hoping they're having a good summer. They haven't lost in months. Jack, you're killing me. All right. What about gold? Well, gold has now broken out of the short time frame balance that we were in for a couple of days. Potential downside continuation. We got that break of the downside down short time frame balance. Open interest was lower yesterday. If we start building open interest at lower levels, that may encourage sellers to continue into this market. And looking back, we have space. We have a lot of space down here. I don't understand it, but it's nothing for me to understand. It's just for me to try and find levels that I can limit risk and find profits. I think this does offer us better opportunity than we've seen in a few days here. Because there's actual reference to deal with. We've got a gap here. Okay, overnight inventory is a little bit short. We've opened with a gap. We have not been able to close the gap, which says we're looking for opportunities to sell strength in this market, but it does need new business to continue. I want to see some volume. Time spent down here would be good, but I want to see some continuation in volume as this market moves lower. We're not seeing really much as far as Delta is in the day time frame, but we got a pretty deep move in Delta in the overnight session. So this last week's low here, somewhat important. It's 1902 is where we're really going to find a potential continuation of a downside market state. Here's the TPO chart. So double distribution trend day. An attempted late spike. It didn't finish as a late spike, but we have something different than we have in the equities. The equities are opening between these 2 points of or these accumulations of time and volume. It's opened outside of it. It has not been able to close that gap. So we're as long as we've been unable to close that gap, we're starting to think about looking for opportunities to sell strength. Last week's low is kind of pivotal in this regard. Okay. What else? I think we had a kind of a low initial balance day yesterday. I think we had 2 out of 7 or 3 out of 7 with initial balances at one extreme or the other yesterday. It was a bad day for that stat, but we're still holding about 70% every day. One of the initial balances remains the high or the low of the regular trading hour session. You might be able to call this because it just barely took it out, but it depends on what time of day it was. But again, opening outside of range of value, unable to close the gap. We're looking for opportunities to sell strength until proven wrong, but look for opportunities in the daytime frame structure to find those cheap opportunities. Here's the euro. So the short time frame balance, open interest was a little bit higher yesterday by approximately 2,200. But still nothing has changed. We're very centrally located inside of the area of balance that we're in. And just going to kind of say, just stay cautious, because it could be a coin flip whether the market at this point is going to test higher or lower. We are in short time frame control. So remember, we're looking at short time frame levels for opportunities. And it looks like we've kind of found an opportunity here. We've opened with a gap in a gap. We've got visual targets down below. We tested this visual target yesterday. We've opened with a gap. We've been unable to close that gap. So now we've opened with a gap inside a gap. What could this create? It could create an island top, but mostly the market's been relatively range bound. So I'm not sure that that's going to be all that powerful. And that said, this will remain an island top perhaps forever, because the market loves to make a liar out of me. So, again, opening with a gap, we're looking for opportunities to continue in the direction of the gap until proven wrong. A gap close may be what that's going to take. Also, a gap close to the low from the previous day can end up being resistance. Here's the TPO chart. Normal variation, prominent point of control, another prominent point of control below, another prominent point of control below, opening in repair, perhaps from this point of control to this point of control. It makes sense. The market didn't spend a lot of time here earlier. It's left a gap. We've got a gap. I would look for the market to test down to one of these points of control, perhaps find buyers down there, and then test all the way back up to this point of control. But the way this market is acting, that could take a week. Here's the 10 here, which again is barcoding. It's balanced. That's all I can say in the short to medium time frame. Is this market is waiting for something. I said yesterday on the prep, if I brought this to the grocery store and they scanned it, it's probably a can of peas. But we'll have to see how this plays out. No overnight inventory change. No open interest change. It's less than a $600 change in open interest. That's, again, the preliminary. It's an estimate, but it's going to be pretty close. So absolutely nothing happened yesterday in the 10 years. Now let's look at the 30-minute chart. All right, so we have overnight inventory to the long side, and it looks like it's already being adjusted. And there is a tendency when we are range bound here for the market to do that, to adjust overnight inventories early in the session. Look at yesterday, we were a little bit short here. We adjusted that inventory even before the open. Look at the day before. We have settlement here. We have the open here. We have overnight inventory long. What's the first thing it does? It adjusts the inventory. Look at this one over here. We have overnight inventory to the long side. What does it do relatively early in the session? It adjusts that inventory. Here's another one. The market's a little bit short in the overnight. The market opens and adjusts the inventory. Here's another one. The market's short in the overnight. It looks lower, but by the end of the day, it adjusts the inventory. The market has had a tendency to do that in this range-bound situation, and it appears to be following suit today. That might be one of the only reasons that I would think about taking a trade, is because of the tendency and the trend of this market to get away from settlement and from the overnight start of the day, and to come back to it at some point, and usually relatively early in the session. So here's the TPO chart from yesterday. It's a double distribution trend day, and the market has opened in repair mode. We were probably going to test an assumed point of control in this distribution and or this distribution before anything happens. I'm betting we're going to test this one because we had overnight inventory a little to the long side, and the market has been adjusting those inventories with relative consistency. and take a look at the natural gas. All right. So yesterday on OK volume, we had a really big liquidation. We lost 30,000 contracts, and that's not a function of rollover anymore, right? So what does that mean? Well, we had a pushback to an important level on the day on what is this? On Friday. Take a look at this. It's still maintaining price at higher levels. Here's the base of a late spike. Here's the base of a late spike. I've put this brown line here to where this late spike really began on Friday. It tested down to it yesterday. Now it appears the market is beginning to create a bull flag. If we find meaningful participation below this level, I think we're gonna probably look for lower levels. What did we do yesterday? Well, we put in a late spike. Here's what it looks like on the TPO chart. Late spike opened above the base of this late spike, but maybe not above the base of where the market really started to leave balance, come into imbalance. We looked at it. We looked at value, but right now it's appearing that we are rejecting that. So yesterday's low and the low of this level right here are going to be kind of viewed as to me as relatively important information. And if we do manage to start to look higher, this trend line is a starting point. We looked above it. We haven't looked above it in the regular trading hours. And that's where the real powerful participants are going to be in this market. So, are we accepting lower pricing according to this late spike, or are we still rejecting lower pricing from this? Are we rejecting higher pricing here, or are we still rejecting lower pricing here? All right. Yeah. We do have that NASCAR race in the streets of Chicago this weekend, and I'm going to be avoiding that like the plague. I'm not that into crowds. I went to go see Dead and Company the other day, but I had my little space there, and that's all right. But all right. Let's get ready. I've kind of rambled on a little bit long this morning, so take your deep breath. Stay humble, grateful, creative, and centered in your trading today. We've still got a lot of Canadian smoke around here. It's kind of strange and leaves a bad taste in your mouth. But from what I understand, by the end of the day today, it should be blown out of here. At least we're hoping so. But have a great trading day. I look forward to seeing you for group coaching and Make Hogue Money at the end of the day. If I don't, I will see you tomorrow morning, same bat time, same bat channel. But we are looking forward to your success. And don't forget about the Jared Tendler session tomorrow at 10 a.m. It will be on YouTube, so we'll look forward to seeing Mr. Tendler and seeing all of you here as well. So trade well the rest of the day, and maybe we'll see you later. Have a good one. Get out there and profit.